Welcome to Quantum Finance. My name is Parker. I'm the head trader here. And in today's video, I wanted to make a quick indicator breakdown on the moving average, convergence, and divergence, also known as the MACD. So the MACD down here, as you can see, it is a momentum oscillator that is a great way to identify trends and trend reversals. So here we have a blue and white line. The blue line is a faster EMA and the white line is a slow EMA. So when you have the blue line cross to the downside, cross below the white EMA, that is a representation of a bearish trend reversal. And when you have the blue cross above the white to the upside, it is a signal of a bullish trend reversal. And so we also have some other things on the chart here. We have this zero line here, this purple line. And so typically when the moving averages, the MACD is above the zero line, it's considered bullish. And when it is below the zero line, it is considered bearish, right? So you see you have a MACD cross to the upside here, gets above that zero line, extremely bullish, which leads to a nice uptrend, right? Getting a MACD cross here, it was in bullish territory, but we're on higher time frames here, like 15 minutes, so the crosses are going to be more significant. As you can see, getting a cross to the downside here, which did lead to a downtrend in price. And we also have the this green and red kind of histogram here. And what this does, if it's decreasing and going towards that zero line, that means the moving averages are getting tighter. That means the blue line is contracting towards the white line. But instead, if they're going out, right, expanding, that means the blue line is getting farther away from the white line, right? So it's just a good way to identify if the moving averages are coming closer together or farther apart. But something you can do if you just want to focus mainly on the MACD itself, you can go into your studies here and go into your settings, and you can actually go to the difference here, and you can take this off. So you can just have your MACD here. This is kind of what I like to do. Just kind of cleans it up a little bit because I'm more focused on, the bullish and bearish trend reversals. So yeah, that's basically what it is and how it works. We can kind of go through and look at some examples here. As you can see, getting a bearish cross to the downside, right? But see how we get a MACD cross to the downside, but the price is kind of holding here and going up. We are well above that zero line. We are in bullish territory. So even though we get a bearish cross to the downside, we are in a very bullish zone, right? Far above the zero line to the upside. So that's something you got to watch out for. It is a good way to identify weakness and potential trend reversals, but if it's really high above that zero line, yeah, just kind of be a little more patient with it. But as you can see, we get a cross down here, which is much closer to the zero line than this cross, and this did lead to the downtrend, and then the MACD crossing below the zero line into bearish territory, which did lead to quite a downtrend here, right? And same here, right? We get a bullish cross to the upside, which was the start of the overall kind of trend reversal. But as you can see, it did make its way back down here and make a new low because we were in this bearish zone below that zero line. So typically, if you get bullish crosses above that zero line, it's typically a lot better buy signal, right? And if you get bearish crosses below the signal line, below that zero line, it is a lot better opportunity for shorts. So it's just a stronger signal if you're getting crosses to the upside, right, above the zero line. It's a lot better opportunity for call options, right? If you're getting crossed to the downside below, it's a lot better for put options. But if you're getting bearish crosses above it, right, just kind of be more patient with it, and I wouldn't take as much risk because it's not as good and strong of a signal for a trend reversal. So yeah, that's a good example here. We are on the 15-minute chart with this. We can kind of work our way up here. We'll go to the 2-hour chart so you can see what it looks like on like longer time frames. So as you can see, bouncing off the zero line here, then really getting our MACD cross to the upside, which did lead to a really nice uptrend here in the stock market, right? Here, getting a bullish cross to the downside, right? Leading to a really nice couple day long downtrend here, right? And then we cross to the upside, right? But we're still in bearish territory. So the price is still coming down, but it's a good way to identify that this trend is about reverse. We come down, we retest the white line here with our blue line, and then we bounce off that and then get our trend reversal here with a nice bounce to the upside. Right? We can just kind of scroll a little farther back here. Okay. So yeah, here's another example here, getting a bearish cross to the downside. This one was pretty high up here in the zero line, right? But as you can see, it led to a monster downtrend here. So we can go to more of a daily chart. Oh, my charts are kind of acting up a little bit right now. All right, so here we are on the S&P 500 daily chart. And in this range, it's been a really useful tool here. As you can see, we'll start here, getting a bearish cross to the downside. As you can see, leading to a strong downtrend here, right? Coming down here, getting back above it, getting our bullish cross to the upside, right? Leading to a strong uptrend in the chart, right? Bearish cross, getting a slight downtrend here, bullish cross, getting our uptrend, right? So you can see the pattern and you can see the significance here of the MACD. Really great indicator for identifying trends and trend reversals and bullish and bearish kind of conditions here, with the price or the MACD being above the zero line as bullish and below the zero line as bearish. Yeah, we can just take a look at the weekly chart real quick. So it is a momentum oscillator, so it might not be the best indicator to use on higher time frame charts. I'd say you're better off between like the 15-minute and the daily chart. It's not the best on like shorter time frames and super long time frames, but you know, it can be useful. As you can see here, I just personally think there's better indicators to use on the shorter and higher time frames. But as you can see here, you know, getting a bearish cross to the downside here, and really just, you know, leading to quite a long downtrend here, right? And then we get our bullish cross here, which led to, you know, a pop up here for a couple weeks in the market, but was in bearish territory, so it did end up fading down and making new low. And then we got a higher low here on the MACD, which is a bullish divergence. And then as you can see, getting a bullish cross to the upside here, which did lead to this trend reversal here in the stock market. And as you can see, we are bullish for the first time here, flipping, getting above that zero line and bouncing off that zero line. For the first time, these MACD has been above that zero line in, you know, well over a year. So yeah, looking strong here on the weekly chart on the MACD. But yeah, so that should do it for the video. I appreciate y'all watching. I hope this helped. Hope this made sense for y'all. You know, get a better idea of how the moving average, convergence, and divergence works. So I appreciate y'all watching, and I will talk to y'all later.